This is the MTPredictor weekly market update for December 2nd. Just going to kind of break from the norm here a little bit. We'll cover the S&P here and then get into something a little different. But just kind of go back. Again, we had our 5-wave pattern up here in the S&P. We anticipated then a correction back to the wave 4 DP as what is typical after a 5-wave pattern. You get a correction, and then this we call a decision point area here was right in that 1369 area where we anticipate that the market needs to make a decision. If this area holds as support, then we should rally as the prior trend was up. If it fails and this support area fails, then we anticipate that the whole 5-wave pattern up will get erased, and we take our decision point off of there, and that gives us a new support area down around 1300. So what unfolded subsequent to that, if we look, put the Elliott wave analysis on using the software here, is we had a nice little 5-wave pattern down unfold here. So just as we expected wave 5 up here to get a correction back to this wave 4 DP, once we've gone wave 5 down now in the other direction, we anticipated that the market should correct back again to this wave 4, this decision point, which is up just above 1440 in the S&P. So around 1414, I think was a close on a Friday there, 1414.50, and we've progressed in that direction. Had this nice blue buyer's candle here with the high volume spike, so more buying stepping in on that little pullback that day. And so this is kind of the target, I'd say, for heading into Christmas. Doesn't mean that we'll get there, but if you happen to be long off of this area, you'd have your stop. Or if you're in some type of option strategy there, you would have your stop to break even at this point, 1360.75 in this case, and just see if you can get to the target. And then we'd come into another decision point, so the market would need to make another decision here at this point. And if this holds as resistance, then the trend which was down here prior would continue down. If they take it out to the upside, then we can go back to the top of wave 1 here and give us the next target, which would be just above 1470, right around 1472. So we'll see how that finishes out into the end of the year. And in the meantime, I just wanted to take a look at a trade setup that we're having good success with in the trading room. I just wanted to share a bit of that and how to fade a gap, an inside gap, a gap that opens in between the previous day's high and low. We'll set that up in the trading room, and a lot of folks are having success with that. So I'm going to show you a little video I did earlier for another presentation. I'm just going to kind of edit it in here, and you can see the how to fade the inside gap using MTPredictor. A lot of gap traders will simply buy or sell the open, depending if it's an up gap or a down gap, and have a huge or very, very wide stop. They might have a 5-point stop in there, 6-point stop in the S&P to make maybe 5 points in the S&P on the other end, or kind of a 1-to-1 risk reward. But maybe there's a little better way where we can instead take a low risk trade and have a high reward. So we're going to kind of fade into that here, and this is a trade that was from a while back. So let's pause the video here and come back and set this up. Alright, here's an example of an inside gap trade setup. So the market has gapped up into this major resistance here. Alright, here's the gap fill area, 13,343. So in other words, on an inside gap, inside gaps tend to fill. The question is, where will they fill? The tendency is that they're going to fill in our major resistance area, which comes from our larger degree time frame, in this case 15-minute chart. If we're trading on the 3 or 5-minute charts, we're going to use the 15-minute chart to map out our major support and resistance. So here's support for the morning in the YM, here's resistance, and you can see the order there hasn't been taken in yet. If if we never get to the entry there at 13,389 and they instead make a new high here, then we'll cancel that order and wait and see if the market comes into the next resistance area. But this is typically where they'll begin to attempt to fill the gap anyway, back to the previous day's close. Once that gap has filled, if it fills, the tendency is the market will then move away to some degree. So we'll just wait and see if this order gets filled and if they can begin to fill the gap. All right, looks like it's just about getting ready to get taken in there.
Order pending.
All right, so that's filled, and now we have everything in control as far as we're short the appropriate number of contracts for the account size. Our risk is controlled at $340 with a stop at 406. Target here is better than twice my initial risk, in this case 2.5 times the size of my initial risk. So on a $340 risk, I could take out about $837 if we can get down to that target there. All right, so we'll see how this trade progresses and come back in just a bit. All right, so you can see we've made some progress here, almost to the 100% initial risk line, which means if I risk $340, basically up $340 at that point. We'll see if we can get a candle to close below that 100% initial risk line and that low gets taken out. We should see the target. But anyway, we've got our risk controlled, so if we lose on the trade, we're going to lose small. If we win, we're going to win bigger, and that's the whole key to the game. We'll just see if our premise is correct today. Alright, so they've gotten through that 100% initial risk line, and we'll see if they can finish this off down to the target down there around 13,347. 350 is probably going to be kind of a natural support and resistance area, so we'll check it when we get down there. You can see we got close to the target there. You can see our software has generated a signal in the opposite direction. Now our STF trend is red, meaning the basic setup is avoid any long trades when this is red. So we'll ignore that. And I said this 50 area would be a little sticky. It's just a natural support and resistance area. Alright, so you see, yeah, maybe I should have taken 50 down there. I knew that was going to be a problem. But here's the point of the premise now. Has my premise changed? Alright, I'm looking at the S&P on another monitor. I'm looking at the NQ. They haven't filled their gaps yet. And so that attractor is still there. The premise has not changed. Inside gaps tend to fill. And so I just need to be patient, let the trade work out, and see if we can get another leg down and close the trade out and move on. Alright, so I just moved the target to 50. I've got a webinar I got to get to, so I need to get out of this trade and set up for the webinar. But I think you can see the point. The premise, inside gaps tend to fill. That was the premise. That's what allowed this trade to be set up in the resistance area here. And just see if they can finish off and get to the target. Okay, so you see we just finally hit the target there, got the order filled. But you can see that the premise, I didn't get shaken out on all this stuff because I had a premise, and that premise was that this gap should fill. Inside gaps tend to fill, and that's all I was playing here once the market came into resistance. Now we had a little issue with the NQ because the NQ wanted to be a little stronger market. All right, so here was the NQ until it hit this resistance area. So you see the NQ had an inside gap up, but it wasn't in a major resistance till it came up here. So it went up, found that major resistance. That's what stalled the trade, and then began to roll over. Once it began to roll over into its resistance, and you know, maybe that now starts to begin to fill its gap, then we were able to have a trade there. So just in time. I've got 5 minutes before my webinar here, so I've got to go. But anyway, that's the reason why you want to use a premise. Even though even our system had a long trade, again, we'd avoid it because it was against the red STF. But it didn't shake us out of our premise. And you can see the gap filled there now right to the tick at 13,343. All right, so hopefully that shows you how a premise can help you in your trading. It's going to allow you to stick with trades, allow you to be much calmer, and focus on what is actually happening in the market, and what not to kind of lose track and focus of what the goal is and what the tendency is. If it didn't work out, again, I never had to move my stop. I don't like to do that. The NQ gave us a moment for pause, but still didn't need to move the stop down. Never got to close above the NQ's resistance, and so we just allowed this thing to play out. All right, hope that helps.